Welcome back, folks. We have the Dow Industrials up 19, Nasdaq's down 14, S&Ps are up 2.5, and now we're going to go over to our man, Mr. Sal Gilbertie. Sal, folks, is the president of Teucrium Funds, and the New York Stock Exchange, you want to trade corn, soybeans, wheat, sugar, all of the above. You can trade them each and every day by using the ETF structures. In corn, it's C-O-R-N, wheat, W-E-A-T, soybeans, S-O-Y-B, sugar, C-A-N-E, and if you want to put them all together, it's T-A-G-S. They all trade right on the NYSE. Sal, welcome back to TFNN.
Thanks so much, Tom. Good to be here.
It's great. I mean, we really appreciate your time, and I know at noontime today, so we came out with the WASDE report, right?
We did. The World Agricultural Supply Demand Report came out, and it was bearish.
Okay.
It shows there are plenty of supplies. It shows we have record amounts of wheat produced and on storage. It shows we have near record amounts of corn produced and on storage, and we have very healthy amounts of soybeans produced and on storage. Now, that said, it also showed that wheat demand rose by 1 million tons.
Okay.
And that's a lot. And what happens is most of that's coming from China.
Yes.
The other surprise in the report related to China was that approximately half of the global corn stocks that now exist in the world are also in China. So, you know, China not only has a voracious appetite for all these grains, they're also storing and building stockpiles as best they can.
Well, you know, and Andy Hecht in the commodities hour, he's brought this up, you know, even in the last year, that, I mean, as societies move up the food chain, right, bottom line is that, you know, there's plenty of Chinese now that want to get meat into their diet, and that's where these grains come in, right?
That's exactly right. I read something this morning that says, you know, China right now has the world's largest population, but some people feel within 10 years, India will surpass them. Now, they don't eat as much meat in India per capita. They don't even eat as many calories in India per capita. But you have other countries now getting as large as China, or approaching China's population. The entire middle class of the world is growing very rapidly. And as you just pointed out, and Andy's fond of saying, the middle class eats meat, they eat protein. That's grain. That really is demand for grain. You're seeing it in particular, Chinese imports of soybeans are at a record.
Okay.
They have not abated at all, not even with their economic slowdown, not even with some of the global turmoil, economic turmoil out there in the markets. They keep breaking records month after month, or near records, in their soybean imports, and that's primarily to feed their swine herd because their growing middle class is consuming more pork.
Yeah, that's what I was going to ask you. Okay, cool, man. So soybean is for pork. I got it right. Okay. Amazing. And hey, well, can we talk a little bit about sugar also? I mean, sugar has been, I mean, you talk about a run. I mean, it's up another 5% today.
Sure, and I think you and I have spoken about sugar and wheat in the past as being El Nino affected.
Yeah.
I think I saw a very good column by Andy within the past couple of days, how rice led things off. It's reflected in sugar.
Yes.
Wheat has had quite a bit of a rally, and I truly believe, because there are certainly adequate amounts of wheat in the globe right now, I certainly believe it's because of some trepidation about the El Nino, because the last, you know, remember, and we've said it before, we keep pounding the table about it, wheat did not hit its all-time high with all the rest of the commodities during the peak. Wheat hit its all-time high when there were back-to-back droughts in Australia, and Australia gets hit pretty hard with El Nino. And we have a very strong El Nino pattern in effect right now. I believe some of the wheat numbers on the global balance sheet today were reduced for Australia, and there are fears that may continue.
And, you know, there is no doubt, I mean, even if people weren't in the commodities market, they know the weather's like not only unpredictable, but it seems like the last 5 to even 8 years, really unpredictable.
Okay, it is, and I think you're bringing something that's very important. The demand for grains is steady. no one, no matter what the weather is, will stop eating.
Right.
They will not stop feeding their animals. In fact, if it's cold enough, everyone has to eat more, including their animals.
No, that makes sense. Right, yeah.
It does. And so what happens is you have, in essence, a very steady supply. And as you said, weather is unpredictable. It is not a matter of if. It's a matter of when there will be another major drought somewhere in the world, be it an El Nino-related drought that affects wheat production in Australia, be it a drought that we had, back-to-back years in the United States 3 or 4 years ago. These things are real. They happen. They tend to happen every 5 to 7 years in a major way somewhere in the globe. Corn tends to have a supply disruption every 3 years, just meaning a yield decline. That's not necessarily a major thing.
Sure.
But people need to be aware that the demand for grains is enormous and steady, and it will not abate even if it doesn't rain. And so right now, when you have grains, in particular today, with the closing prices as they were today, you have soybeans and corn at or slightly below the consensus cost of production.
Okay.
When I survey farmers, economists, people that I know, and when I look at spot continuation charts, all the numbers are about the same. For corn, it's about $3.60 a bushel reflected on the futures exchange.
Yes.
For soybeans, it's about $8.60. And for wheat, it's about $4.60. So, with the exception of wheat, which is 5-8% above its cost of production, you are at or below cost of production on the major agricultural products in the world that people are using more of every day, not less.
Now, what's cool here, Sal, and folks, there's been stories, I've felt this way for a long time, but there's been stories in the Journal this past week that, when you go to CFAs or whatever, the bottom line is that they're saying, okay, you should have so many bonds, so many equities inside your portfolio. Well, the Journal had a story, Sal, that in this, even the hedge funds, that everything is going down and going up at the same time. And inside that aspect, that's what's so cool about your ETF structures here, because the bottom line is that we have wheat and corn and beans at lows, but that isn't the stock market, man. That's living. So for diversity inside their portfolio, I can see how these things they should be part of a portfolio. Let's put it that way.
I couldn't agree more. Now, we're ag-centric. We promote agricultural ETFs unabashedly, but I will tell you that when you look at long-term correlation studies, the least correlated major commodity that trades in an ETF format, so it's accessible to any investor,
yes,
is sugar. It is far less correlated than gold. When you look at the charts, many people hold precious metals and gold as a diversifier of their portfolio.
Okay.
Now, with grains actually being less correlated, and they're always less correlated. Over long periods of time, you could pick any 20-year period of the S&P 500. Grains are always less correlated than gold when you look at a 20-year snapshot. And so why wouldn't somebody, a rational asset allocator, when you have grains at or near their cost of production, when you know there will be a supply disruption at some point because simply of weather, weather's so unpredictable, why would you not allocate some money into grains just like you do to gold and other commodities for diversification purposes? No,
there's no doubt. And folks, the symbols on wheat, it's WEAT, corn, CORN, soybeans, SOYB, and sugarcane, CANE. Sal, thank you so much. Really appreciate it. You have a great one, safe one. I look forward to having you on again.
Always a pleasure, Tom.
Thank
Thanks.
you.